Now, let us review the money management rules that apply to the full version of the double-barrel gun trading strategy. In the framework of the full version of this strategy, in accordance with the conservative approach of capital management, in each individual transaction, trader may risk only a small portion of his initial capital, ranging from 1% to 2.5%. In addition, the maximum number of open positions in a trader's portfolio should not exceed 3. Let us assume a trader opened a live trading account and funded it with $3,000. Thus, in accordance with the conservative money management method, trader will risk no more than $75 in one trade. Depending on the market situation, trader will place his stop-loss order within a range between 1/4 to 1/2 of the ADV of the selected financial instrument, to limit his losses. Thus, knowing the value of stop-loss in points and the limit of financial risk in dollars, trader will be able to determine the size of transaction in lots or units. Operating by the rules of the conservative money management method, the leverage used by the trader will not exceed 15 to 1. No doubt, you are all interested in the question of what percentage of profitable trades and what PL ratio this strategy has. It is quite difficult to give an unambiguous answer to this question when trading in the framework of the full version of the double-barrel gun trading strategy, since the size of an open position depends on the zone where the initial signal to open a position was formed. In addition, trader has the option to increase the size of a position after opening it. Finally, one must also consider the fact that the size of the profit and risk for each trader can vary, depending on the trader's commitment to risk. Here, I can only note that preliminary testing of the full version of the double-barrel gun strategy on a real trading account showed more attractive and stable results compared to the simplified version of this strategy. Theoretically, it is possible to calculate the PL ratio for a number of trade scenarios that may take place within the framework of the full version of the double-barrel gun trading strategy. To do this, for the value of 1 unit, we will take the size of the position opened by the trader in contracts, which, if the price of the financial instrument changes by 25% of the ADV of the selected instrument, will generate a profit or a risk in the amount of 1R, corresponding to 0.25% of the deposit. Here is the matrix of trading scenarios, which displays information on the main parameters of the transaction, depending on the level of the initial opening of the transaction. As it was said above, within the framework of the full version of the double-barrel gun trading strategy, there are no rules for defining a sideways trend in its pure form. Instead, the strategy rules assume a neutral bull or neutral bear market phase, which represents temporary consolidation within the prior bullish or bearish trend. This was done to more accurately determine the balance of power of market participants. It's time to expand on this topic in more detail. In a bullish or neutral bullish market, the balance of power may be as follows. As mentioned above, after a trend change from bearish or neutral bearish to bullish, that is, when a bullish reversal signal is formed, the new balance of power becomes equal to 300. After the formation of a correction from a local maximum with an amplitude of 1/3 ADV and more, up to touching MA 200 lines, the balance of power changes from 300 to 210. After the formation of a correction that reaches the X or Y zone in the absence of a confirmed dead cross signal, the balance of power changes from 210 to 201. After the formation of a confirmed dead cross signal, the balance of power becomes equal to 102. During the correction that reaches the lower band of the envelope, the balance of power changes to 0 to 1. After the price resumes its rise, following the formation of a confirmed dead cross signal, and touches the MA 200 lines from below, the balance of power becomes equal to 120. The two slides below show examples of the balance of power in different market situations.